In the metals market today, gold finally finds some support after being down 3 of the last 4 sessions. We rallied over 1% today, being up almost 1.5% on the highs. We went down to about 1387 in this little 3-day sell-off that we had, and that wasn't prior support, but any market can find new support and create that support on its own wherever buyers emerge, and that seems to be 1387 at this point. It's an area of convergence of moving averages, and it is certainly where the market will hold up if there is another sell-off. Iran and OPEC is part of the reason this is actually happening. Iran is sparking geopolitical tensions in a dispute with their own members of the Organization of Petroleum Exporting Countries. OPEC, specifically Saudi Arabia, wanted Russia to become a permanent member of OPEC instead of this fictional organization that we all call OPEC Plus. And Iran, in a dispute with some of their partners in OPEC who support the U.S. sanctions, again, specifically Saudi Arabia and the United Arab Emirates, is saying they may use their veto to block Russia's admission. They did agree to production cuts going out another 9 months in the crude oil space, but this is sparking the idea that there could actually be military flare-ups, which is giving a little bit of a bid to gold. That's putting that geopolitical premium back in the gold market. That's part of the reason we got the spike today. And then another part is yields continue to fall. We got the 10-year note here in the U.S. down to 2% again. It bounced off that level, but not by much. We briefly had the 5-year yield fall below the 2-year yield at a 176 level, inverting that part of the curve as well. This is putting a lot of tension or a lot of pressure on global central banks, and this is also boosting gold as it re-weakens the dollar after a pretty good performance by the dollar last week. And then on top of that, we've got 40% of global bond yields outstanding in negative territory right now. That's a very big number. So all of that giving a little bit of a bid to gold. As yields fall, we get an inverse relationship to gold, and as the dollar falls, the inverse relationship to gold pushes that up and helps that 1387 level be stronger support than it may have otherwise been.